Receivable financing. Factoring involves an absolute sale. Generally, factoring involves an absolute sale of company's accounts receivable to an identified buyer called factor. So under factoring, it results to a transfer from the selling company to the factor of the ownership and risk and reward in collecting the amount of accounts receivable. So because of being an absolute sale, ownership of those accounts receivable will be transferred from the selling company to the buying company or the factor. The factor will now have the ownership over those receivables and the risk and reward in collecting them. So factoring is actually a without recourse notification basis type of receivable financing. Without recourse because of absolute sale, the company has no more obligation if the customers will not be paying to the factor or the buying company. And it is notification basis because the customers are notified that their accounts had been sold already to the buying or factor company. In contrast with pledging and assignment, factoring usually decreases directly the amount of accounts receivable at transaction date and may involve recognition of gain or loss on factoring. In contrast kasi with pledging and assignment, pledging will only require disclosure, while assignment will only require journal entry of classifying the accounts receivable, but the ownership does not transferred from the borrowing company to the lending company. So there is no transfer of asset. However, under factoring, there is a decrease in the amount of accounts receivable because there is an absolute sale. So you are crediting in your journal entry the accounts receivable good as sold. So factoring either be normal or casual sale or sale under continuing agreement. So the difference between the two is that factoring is a normal or casual sale if company has the discretion to sell its accounts receivable anytime if they are in need of additional funding or financing. So in a casual sale transaction, the selling company, upon factoring of its accounts receivable under a normal or casual, when we say normal or casual, we're actually referring to a one-time sale of accounts receivable to the factor buyer. And the company may sell to different factor who are willing to buy the accounts receivable of a selling company. So again, under a casual sale, it's just a one-time sale of accounts receivable. Factoring is a sale under continuing agreement if the company made agreement with another company to sell its accounts receivable, usually upon initial recognition through credit sale, on a continuous basis. So in contrast with factoring under normal or casual sale, continuing agreement by the name itself, you're going to sell every time you have accounts receivable. Sale under continuing agreement involves assessment of quality of accounts receivable, commissions, and recognitions of factors holdback. In a continuing agreement, there are arrangements with a factor that before the sale will be completed or before the sale will be perfected, there would be assessment of quality of accounts receivable, or let's just say the factor's credit approval if the accounts receivable are in good quality. So it also involves commissions. When we say commissions, in determining who are the buyers or other transactions that will determine the quality of the accounts receivable, and recognition of factors holdback. When we say factors holdback or receivable from factor, this serve as the protection or holdback. The holdback is the protection of the factor for possible uncollectibility such as sales return and other adjustments. Because it is accounts receivable is coming from credit sale, utang, so there are instances that the company will be in doubt of the collections of those accounts receivables. So the factor, the buying company will be anticipating for those sales returns and other adjustments. That's why there is a recognition of so-called factors holdback. Factors holdback is a liability on the part of the buying company, and it is an asset on the part of the selling company. That is why on our part as a selling company, it is a receivable from factor. It's just a holdback. Now, if there are sales return or other adjustment that cause for the uncollectibility of the accounts receivable, those returns and other adjustments will be charged against that receivable from factor or factor's holdback. So, for a continuing agreement, a selling company, upon factoring of its accounts receivable to an identified factor, again, always take note it is in a continuous basis. And before the sale will be perfected, there is a need of factors credit approval or the assessment of the quality of the accounts receivable, commissions, and the recognition of factors holdback.
So let us have this problem. So sabi dito, Knight Company, in order to stabilize its liquidity, forced to factor its accounts receivable worth 2,555,000 with an allowance for doubtful accounts of 215,000 on January 1, 2019 for purposes of coping for balancing currently maturing obligations and other operation purposes. An examination of the quality of the accounts, the company and the identified factor agreed up to 90% of the net value of accounts receivable as cash proceeds. Take note yung sabi dyan, 90% of the net value. Pag sinabi natin guys net value, meron tayong consideration sa allowance for doubtful accounts na i-deduct natin siya from the 2,555,000 gross carrying amount ng factored accounts receivable. So yung proceeds natin, yung cash proceeds, i-base sa ganyang assumption. So yung requirements sa atin, compute the net cash proceeds received from the factoring of accounts receivable, then prepare the required journal entries to record the transaction. Maybe at some point sa ating computation later, we're going to compute also the loss on factoring. So ganito yung solution natin dyan. Yung face value ng accounts receivable natin o yung gross carrying amount na 2,555,000, bawasan lang natin ng allowance for doubtful accounts na 215,000. Makukuha na yung net value of accounts receivable or mas kilala natin sa net realizable value niya. So, 2,340,000, multiply ka ng 90%, makukuha na natin yung gross cash proceeds na 2,106,000. Then from 2,106,000, bawas tayo ng service and other expenses related dun sa ating factoring transaction. But since sa problem hindi naman nag-provide ng other expenses, we'll assume na lang 0. So net cash proceeds natin will be equivalent to 2,106,000. Then, yung net cash proceeds natin, to compute with our loss on factoring, ibawas natin yung net cash proceeds or i-compare natin yung net cash proceeds doon sa carrying value ng ating accounts receivable. Which is, yun nga, yung na-compute natin kanina na net value. Yung net value, equivalent yan sa carrying value ng ating accounts receivable. So, 2,340,000 versus the 2,106,000 na net cash proceeds. So, loss on factoring natin is 234,000. So, yung journal entry natin dyan is debit tayo ng cash for the net cash proceeds na 2,106,000. I-debit natin yung loss on factoring na 234,000. And i-debit natin yung allowance for doubtful accounts na 215,000. Bakit natin dinebit sa allowance for doubtful accounts? Kasi nga, associated siya sa factored accounts receivable. So, need natin siya i-eliminate. So, therefore, yung factored accounts receivable na 2,555,000, yung kaakibat niya na allowance for doubtful accounts, yun yung 215,000. Then last, we credit accounts receivable for the entire face amount na 2,555,000. So, ganito yung ating computations and journal entry when it comes sa casual factoring or normal sale ng accounts receivable. So, let us have this problem. Sabi dito, Speed Company factored its accounts receivable amounting to 1 million with credit terms of 5, 10, and 30 right after shipment of the goods was made in favor of the customer on January 1, 2019. The factor charged 5% commission based on the value of the accounts, net of credit terms, and 20% factors holdback of the value of the accounts, net of credit terms. Importante po yung last statement natin dito because yung basis ng ating commission at ng ating factors holdback, nasa value po ng ating accounts receivable na 1 million after considering yung credit term natin na 5, 10, and 30. 5, 10, ibig sabihin may 5% cash discount pag nagkaroon ng collection within 10 days and no discount pag nagkaroon ng collection beyond 10 days or within 30 days. Next, on January 10, the company was notified for the sales return by a customer amounting to 90,000, which later that day, the company received the goods returned. After that, no other return of goods sold were made. On January 30, the company was notified by the factor that the remaining accounts receivable were collected, signifying for the final settlement of the factor's holdback account. Na yung requirements sa atin dito is to compute the net cash proceeds received from factoring of accounts receivable and prepare the required journal entries to record the transaction. So this is on the assumption na yung factoring natin is on a continuing basis. So sige, proceed tayo sa solution. So yung face value ng ating accounts receivable na 1 million, babawasan natin ng allowance for sales discount or simply the sales discount which represents our credit term. Then yung commissions, then babawasan din natin ng factors holdback. So yung allowance for sales discount natin is 5% ng 1 million. So that would be 50,000. Then commissions, sabi doon is net of credit terms. So 1 million minus 50,000. Saka pa lang tayo magmamultiply ng 5%. So that would be 47,500. Then factors holdback, the same based on the value of the receivable net of credit terms. So 1 million minus 50,000 times 20%. So that would be 190,000. So net cash proceeds natin will be 712,500. Now, yung journal entries natin sa January 1, 2019, we debit cash for the net cash proceeds of 712,500. Debit tayo ng sales discount, 50,000. Commissions or factors fee, 47,500. And receivable from factor, 190,000. Then, yung credit natin sa accounts receivable is the entire amount of 1 million. Then sabi sa problem, balikan natin yung problem. Sa January 10, the company was notified for sales return by a customer amounting to 90,000. So yung 90,000 sales return natin, yung purpose niyan ng factors holdback is maging buffer siya ng factor. Doon niya i-charge yung mga returns and other uncollectibility allowances. So yung gagawin, to recognize the sales return, debit ng sales return, 90,000. Yung credit natin sa factors holdback is net of the associated sales discount. Kasi meron tayong sales discount na ni-recognize. So therefore, sales discount, 4,500. Paano na-compute si sales discount na 4,500? It is simply 90,000 times 5%. So that would be 4,500. So yung i-credit lang natin sa receivable from factor or factors holdback account is 85,500. By the way, yung journal entry natin sa January 1, yung nakadebit na receivable from factor na 190,000, yan po ay magsaserve as current asset. Receivable from factor po yan. Current asset on our part na nagbenta ng accounts receivable. So when we factor under a continuing agreement, it is normal na si factor magkaroon ng holdback sa mga accounts receivable natin. Charging lang dyan usually sa mga sales returns and other uncollectibilities. So yung receivable from factor, yan yung pinaka-buffer ni factor sa mga sales returns. If pag na-collect na lahat ng accounts receivable, meron pang balance si receivable from factor account or yung factor's holdback, the factor will remit the final balance of the receivable account or the factor's holdback. So in relation with our journal entry sa January 30, kasi sabi sa January 30, the company was notified by the factor that the remaining accounts receivable were collected, signifying for the final settlement of the factor's holdback account, if any. But since yung factor's holdback natin, wala nang ibang charges na chinarge sa ating factor's holdback account kasi sabi doon, after sa January 10 na return ng 90,000, no other return of goods sold were made. So therefore, magiging final amount natin, receivable from factor na 190,000, babawasan lang natin yung amount na na-charge net ng discount. Na-net siya ng discount kasi may associated sales discount. So 85,500. So yung balance for final settlement is 104,500. So yung journal entry natin for the final settlement sa January 30 ng factors holdback would be debit to cash and credit to receivable from factor or factors holdback account. 104,500. So that's it with our solution for factoring under a continuing agreement.